Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. And in fact, I'm so excited and grateful to be here with you this morning as we are going to be taking another fresh new look at the financial market. This is the last trading day of the week. Happy Friday to everyone. And in fact, today comes with a lot of peculiarity as regards to how majority in the market will be getting ready to close their positions ahead of the new week. But before we kickstart this session, I would like to confirm that we are all on the same page. So if you can see my screen and you can hear my voice clearly, I would appreciate your comments. Just type in hi in the comment section, as this will give me a positive feedback that we are good to go this morning. So I would like to see some feedback, please, in the comment section. So let's see what we have here. So I would like to see some feedback, please. If you can see my screen and you can hear my voice clearly without distortion, please let me know in the comment section. All right, so Elia Manil, okay, good morning. Mr. Grenholm, good morning to you. Murphy G, good morning. 700889, good morning to you. 5126, thank you. Anguya, good morning to you too. All right, Carrie, good morning to you. Thank you very, very much. So I think with this, I will take this as a positive feedback that we are good to go. So in the next 1 hour, I'm going to be your host. My name is Sharif Daramola, and in preparation for today's trading session, I have conducted a comprehensive price action analysis on all of the assets on our watch list using simple parameters such as trend lines, key levels, and chart patterns to gain valuable insight into the historical price movement on all of the assets on our watch list. Well, since the beginning of the week, we have been monitoring 4 financial assets, which are the the GBPUSD, the XAUUSD, which is popularly known as the gold spot. We also have the USTech100, popularly known as NASDAQ, and of course we have the USOILSPOT, all of which we have been monitoring since the beginning of the week, and in fact they have been doing pretty well across board. So we are going to be looking at how well they did and how we intend to secure our current positions, and of course strategically position ourselves ahead of the New York session today. Now, for those who are joining us for the first time, you are highly welcome on board. And you might be asking, what is it that you are doing here, or what is it that we do here? Well, on the X Trend Speed Live, we come here on a daily basis in anticipation of the New York session, where we come to review how well the assets we've been monitoring so far has been doing, and at the same time strategically position ourselves ahead of the New York session. So this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time, and I implore you to stay tuned into the end of the session. And of course, the more time you spend with us, the better you get in understanding how this works, and most importantly, eventually be able to use the information you have gathered here to make your own independent trading decision. So once again, you are highly welcome. Now, with that being said, here we shall be diving right into the business for today. And in fact, the first thing we normally do in this community is to check on the economic calendar. And for those who have been with us for a while now, you know how these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns, hereby giving us valuable information that will help us to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. So we normally focus on high impact events from the economies that affect the assets on our watch list. So considering the asset on our watch list for this week, we are going to be looking at high impact event from the United States and of course from the United Kingdom. Now for today, August 25, Friday, we have the Jackson Symposium, which is coming up in about three hours from now, and of course the Fed Chairman's Powell speech. Now, for those who don't know what the Jackson Hole Symposium is, well, this is a significant annual gathering of central bankers, economists, and financial market participants, and in fact, it offers a platform to discuss critical economic and monetary policy issues impacting the market sentiment. And of course, everyone will be looking forward to Fed Chairman's speech, which will definitely be giving us an insight into what the monetary policy of the Fed is and how we want to, and of course, this will help us to position ourselves for trading opportunities. So as technical traders, we shall be sniffing through the charts in a moment, where we shall be looking out for patterns and structures that will help us guide our trading decisions for today. So with that being said, here we shall be diving right into the charts, and of course the first asset on our watch list for today is the US All Spot. Now on the US All Spot, the last 24 hours has been a little bit choppy as we saw price go through an indecisive phase in the last 48 hours or so, as we saw consolidation phase before that bullish traction began just as we expected. But before we go into the details here, I would like us to run through how the week started for us here in this community and what led into the decisions we have been making so far this week. Now, at the beginning of the week, right here on the 1 hour time frame, the first thing we observed was this flat channel where we saw price confined within the $81.40 level, and of course the $80.50 area, giving us an insight into the level of indecision at that point in time. And coupled with that, you know how we use our flat channel in this community. We want to wait patiently for a signal to come, either in the form of a breakout or breakdown of that range, to give us an opportunity to either buy or sell. Now, if you remember vividly, on Monday, I acknowledged our key level for the week, which was the $81 mark, which I said if price action breaks down and retests that structure, we shall be joining a bearish opportunity. And that was exactly what happened. About 2 or 3 hours into the New York session on Monday, we saw the breakdown retest of structure, which triggered our first sell position for the week. And since that moment, we sold the US All Spot all the way into the midweek. As you will see, we added more positions at the breakdown of the $80.50 level. We added more at the $80 area, $79.50, and of course the $79 area to maximize the potential of this bearish move, hereby giving us over 600 to 700 pips in profit on that one. Then during our live session on Wednesday and Thursday, we noticed that as soon as price action got into that zone around the $78 level, we begin to see some buy traction resume around that area. And this in fact led into a consolidation phase where price was trapped and confined within the $79 level and the $78 area. And as a result of this, we anticipated a breakout of the $79 level to trigger our first buy position for the week. And in fact, this later happened earlier today, giving us over. So for those who are taking advantage of that opportunity, you will currently be running with about, the first position here will be running with about 88 pips, while the second position here will be running with about 40 pips in profit, giving us a total of 120 pips in profit. Now, for those who are taking advantage of this opportunity, well done to you for being on standby to have capitalized on that move. Now you know how we do it. The next thing we want to be doing right now is to move our stop losses to secure these positions while we look out for more trading opportunities. And from this current structure, I am of the opinion that anywhere around this entry point, the second entry point here, at the $79.50 level seems most appropriate to secure this position. And of course, we do want to give enough room for price action to breathe just in case some retracement might happen before the uptrend continuation kicks in. So with a well-secured position at this point, what is going to be our plans for today? And for those who had missed out on the buy position, do we still have the privilege of enjoying this uptrend? That is, if we had missed out, can the market still present us with new opportunities to capitalize on this move? Now, before we talk about that, I would like us to have an holistic perspective into what is going on in this market. This would refresh our memories as regards to what we saw at the beginning of the week. And of course, for those who had missed out on our early sessions, will have the privilege of being on the same page with us. Now, the first thing I will be doing here is to scale up into the 4 hours time frame, which was where we started our technical analysis for this week. Now, look at what we have here on the 4 hours time frame. The first thing we observed on this chart was that since last month, price action has been on a very strong bullish momentum, as we have noticed a consistent and uniform higher highs and higher lows. Now, to further emphasize the strength of the buyers here, we connected the series of higher lows to give us an ascending trend line. In fact, we have a couple of them here which has been supporting this bullish momentum. Then besides the ascending trend lines was this key level at the $78.50 area. And in fact, if you look at how this level has been related to since the beginning, since the mid-month of July, you will see how it has been a major determinant of buy pressure. Look at what has been going on here since price broke out of that $78.50 level in the month of July. We saw that at every point in time when sellers try to break through that structure, it has been met with strong resistance from the buyers, giving us a clue into how strong that area is for buying power. And throughout the course of the week, sellers really did wanted to break through the structure significantly. As you will see here, we saw price breakdown at some point, but we saw the nature of the candles which project a sharp rejection of that zone, giving us sign that sellers found it difficult to settle below the $78.50 level. And as a result of this sharp rejection, it is quite clear that price action may likely be respecting that area one more time to push another wave of bullish momentum. And one more interesting thing about the $78.50 level is the fact that it also shares a beautiful confluence with that ascending trend line. And of course, you know how we use our ascending trend line in this community. As long as price remains above the ascending trend line, we shall continue to look out for patterns and structures that will support the idea of buying that asset. And yesterday's trading session, I told us all that the tendency of price action continuing to the upside is looking very much likely, and that we shall be looking out for buying opportunity as long as price remains above the ascending trend line. So I actually wanted us to see how important this confluence is on a higher time frame before I go into the details on the 1 hour time frame. Now, with the information we have gathered here, it is quite clear that it's looking as if price action may likely be inciting an uptrend continuation. So at this point in time, you will see that price action is currently oscillating around that $80 zone, where I will need a further breakout of that structure to give us more confirmation that truly we are going to be going to the upside. Now, with the information we have gathered here, let's scale down into the 1 hour time frame. Now, scaling back into the 1 hour time frame, you will see this is what we have here. And in fact, this was the range we spotted during the live session yesterday, confined within the 79 and the $78 area. Now that we have a breakout of the resistance line of that range, I'm of the opinion that price action may likely continue to the upside. Now, with the situation we have right now, it is quite clear that we have been noticing some higher lows since yesterday. So I would like to acknowledge these higher lows, as we shall be using it as a yardstick to guide our trading activity for today. So if we connect the series of higher lows, we have an ascending trend line which we shall be using to guide our trading activity for today. So we like to adjust this, let it touch majority of the pivot lows. So what this simply means here is that as long as price remains above that ascending trend line, we shall continue to look out for patterns and structures that will support the idea of buying. Now, with the situation here, we can see price is still oscillating around that zone, giving us sign that some selling pressure want to come in around that area, and there are chances that price could still come back to retest the $79.50 level that was broken, and of course the ascending trend line to respect it one more time to incite an uptrend continuation. So now, for those who had missed out on these buying opportunities in the last 24 hours here, well, we want to remain patient, waiting for new structures to mature. So if price action comes back to the $79.50 level, we shall be looking out for patterns like double bottom structures, head and shoulder pattern, or any sign that sellers are finding it difficult to stay below the $79.50 level. Then we want to be part of an uptrend continuation. So that is one way we are going to be looking out for an uptrend continuation. So let's see if the market will drop back into the ascending trend line, which of course shares a confluence with the $79.50 level to join an uptrend continuation. However, if price does not drop to the downside and instead it continues to find higher highs, then we shall be positioning ourselves above the $80 mark to join the uptrend continuation. Now, there are two ways to which we can capitalize on this move, and for those who have been with us, you already know how we do it here. Now, for those who have been profitable so far this week, that is, if you have enjoyed this, been part of this profitable journey, we can afford to leverage on the profit we had made so far to test waters above the $80 level. So in that regard, we want to be having a buy stop order above the $80 level. However, if you are new with us and this is going to be your first buy position in this market structure, then I will be suggesting that you want to be waiting for confirmations to happen before you jump into a position. So a breakout first of all, scale down to the lower time frame like your 15 minutes, 10 or 5 minutes time frame to look out for retest of structure before jumping into the buy position. So at this point in time, the whole setup we have here is looking very bullish, so we shall continue to look out for buying opportunity. And in fact, we have multiple levels here that will give us the potential of maximizing this bullish momentum. So we have the $80 level, we have the $80.50 level, and of course we have the $81 area, where all of which we need a breakout of that structure to add more position to our buy trade. So this is how we are going to be buying the US All Spot for today. However, in as much as we're looking out for buying opportunity, you know how we do it in this community, we also want to keep tabs with the opposite direction too as well. So we want to look out for what chances does the sellers have here to push price to the downside, and in fact, what do we want to see on this chart that will make us change our bias from bullish to bearish? Well, we already have a trend line which has been marked out on this chart, as you will see, and as long as price remains above the trend line, we look out for buying opportunities. However, if at any point in time we have this trend line broken to the downside, then we want to start considering selling. And for me, I would rather want to see price break down both the ascending trend line and the $79.50 level to be part of a selling opportunities. So if price breaks down the trend line, we want to scale down into our lower time frame to look out for confirmations which would reflect on the chart as price retesting the trend line to incite a downtrend continuation. And in fact, if we are selling, we have multiple levels as well that we can use to maximize the potential of the bearish move. We have the $79 level, we have the $78.50, and of course the $78 area. So let's see how the market will play out here. So our center of focus for today is basically between the $80 level and of course the $79.50 area, where we shall be looking out to see how the market participant will be reacting to the zone. So the breakdown of the $79.50 level, like I said earlier, is what we shall be looking out for to sell the US All Spot, while the breakout of the $80 level will be welcoming buying opportunities at this juncture. So it's a simple setup. Let's mark out these levels on our chart, as we will be needing them as a reference point to guide our trading activities for today. Now, if you have any questions or you need me to do some clarifications to my explanations, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. Now, let's talk. Okay, I can see some comments here. 4123, good morning to you. Happy Friday. 9701, good morning. Francisco 56, good morning, and thank you for checking in. So with that being said here, let's dive right into the next financial asset on our watch list. The next asset on our watch list for today is the USTech100. Another phenomenal move we experienced here on the USTech100 in the last 24 hours as price action nosedived, breaking down that ascending trend line for the first time this week to give us more selling opportunities in this particular market. Now, before we go into the details here, let's run through how the week started for us in this community. Remember, at the beginning of the week, we have been buying since the beginning of the week. And of course, we noticed our price action was sitting above a very strong demand zone, giving us the confidence of anticipating buying opportunity. And in fact, to make things a little bit clearer for us, especially for those who are not part of the live session on Monday, Tuesday, well, I would like to scale up into the higher time frame to make things a little bit more clearer for us to see. Now, on the 4 hours time frame, remember that we had a demand zone around the 146.61, the 14,600 level, as you will see that since the beginning of the month of June, this level had been a strong buying niche for participants in this market. Now, in addition to that, we had an ascending trend line which fits perfectly with that demand zone, giving us clues that we are likely going to be seeing an uptrend scenario. Now, in addition to that is this descending channel, as you will see here. As you will see, we have this descending trend line, which formed a descending channel, of course, which also was one of the major parameters that guided our moves. So with the scenario here, it made quite a lot of sense that we look out for buying opportunities as long as our price action remain above that demand zone. So with the information we had here on the 4 hours time frame, we anticipated buying opportunities. So when we scale down into the 1 hour time frame, this is what we saw at the beginning of the week. So I just want to zoom it in so that we can see things clearly. So at the beginning of the week, just right above that demand zone we spotted on the 4 hours time frame, we saw how price was confined within a range that was between the 14,740 and the 14,665 level to give us a flat channel to work with. And you know how we do it whenever we have a flat channel like this. We want to wait for a signal, which of course will come either in the form of a breakdown of structure to give us selling opportunities or a breakout of the resistance line to give us buying opportunities. And in fact, the breakdown of the structure never happened, of course, so it was the breakout that gave us the signal that we are going bullish. And during our live session on Monday, I told you I was already in a buy position. And for those who missed out, that I said we should wait for a retest of structure to happen, which of course did a couple of hours into the New York session on Monday to trigger that buy position. And in fact, we were lucky enough to maximize the potential of that move as we continue to add more positions at the break of the 14,820, the 14,900, 14,950, of course the 15,000 level, and of course we also had it at the 15,150. So we kept on maximizing the potential of that bullish move all the way to the upside. Now during our live session yesterday, we saw this consolidation phase here where price was trapped within the 15,360 and the 15,290 to give us an insight into the uncertainty in the market at that point. And I told us all that we will be anticipating an uptrend continuation if price breaks out of the 15,360, which of course never happened, and that we might likely be seeing a counter trend. Of course, price had moved significantly well, and there are chances that majority of participants in the market who had bought the USTech100 at a very cheap price, let's say around the 14,800 area, will at some point want to be doing some profit taking activity. So as a result of that, I told us for counter trend traders that you might want to be capitalizing on the breakdown of the 15,290 to join a bearish momentum. And that was exactly what happened a couple of hours into the New York session. Price dropped into the downside, and I also told us here that as soon as price gets into the 15,150, which also shares a confluence with an ascending trend line, we want to move all our stop losses to secure the current sell positions while we wait and see how the market will react to the 15,150. And of course, the breakdown of the 15,150 welcomed more selling positions as we rode the move all the way to the downside, hereby maximizing the bearish momentum. And in fact, if you had only taken one position, you will have over 450 pips move on the USTech100, let alone having the multiple entries we have here. So well done to you all for those who are taking advantage of these opportunities. Now, for those who still have a sell position running at this juncture in the market, it is high time you moved your stop losses to secure this current sell position. And with the way things are going right now, I'm of the opinion that anywhere around the 14,900 area seems most appropriate to secure this current sell position while we look out for the next course of action. And of course, you know that we do want to give enough room for price action to break just in case that the downtrend scenario will continue. Now, with the positions well secured at this juncture, what is going to be our next line of action? Now, it's getting a little bit more interesting. As you'll notice, this was where the breakout of this resistant line at the beginning of the week was what signaled the idea of buying this asset at the beginning of the week. Now that we had the breakout of that structure, look at what is going on right now. Price appeared to have come back into that zone to retest it, and immediately we saw the retest of that structure. We saw a couple of bullish candles springing out of that zone. Now the question is, will price action follow the technical expectation of a breakout retest of structure? Remember, whenever we have a breakout of structure such as this, we expect at some point in time price will come back to retest the structure in anticipation of an uptrend continuation. Now, are we going to see buying opportunities today, or are we going to see price break down that structure to incite more selling opportunities? So at this point in time, we have secured our position, and we are not going to be selling unless we have price action break down the 14,740 level to incite more sell-offs. Now, one interesting thing about this zone here is the fact that it also shares a confluence with that ascending trend line we spotted on the higher time frame. Look at what we have here. Respecting it immediately, we saw price retest it and buy pressure resumed from that area, giving us chances that price is likely going to continue an uptrend scenario at this juncture. So now, how do we intend to position ourselves for today's trading session? Well, let's zoom right into the current structure, as this is where our center of focus is going to be for today. So let's zoom right in. So like I said earlier, we are only going to be selling, adding more sell position at the breakdown of the 14,740. Now we have another level at the 14,830 area. Is it 14,835 level? So you do want to be marking out this level on your chart, 14,835 level, as you will see here. So we are going to be looking out for buying opportunities above that area. So this is how we are going to be capitalizing on a potential reversal pattern. And of course, if you are part of the profitable journey so far this week, we've been able to scoop in over 1,000 pips in profit in total from both the buy and the sell positions we took advantage of. So if you have been part of the profitable journey, you can afford to have your buy stop order above that area. Then ensure that you have your stop loss in place just right below the previous structure. It's going to be a wide stop loss in this case scenario, considering the nature of this current structure. So we have between 65 to 70 pips stop loss on the single one. Let's see how the market will play out, and if price action continues to climb and find new highs, then a further breakout of the 14,900 will welcome more buying opportunities. And mind you, we have multiple levels here that we can use to maximize the potential of this move. So we have the 14,950, we have the 14,150. If price action continues to go on to break out these levels, we want to be adding more positions to maximize this potential uptrend scenario. So let's mark these levels out on our chart, as we shall be needing them as a reference point to guide our trading activity for today. Now, let me quickly remind us on this one. We are not going to be selling at this juncture. Our price is above our level that was broken at the beginning of the week, which is the 14,740, and of course price still remains above that ascending trend line we identified on the daily and 4 hours time frame. So we continue to hold on to a bullish bias today, and the only condition or criteria that will incite selling opportunities today is if price will break down the 14,740 level. So please, let's note this: selling opportunities will only come when price breaks down the 14,740. So at this point, we hold on to a bullish bias. If you have any questions whatsoever as regards to my explanations or this current setup, feel free to let me know right in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next financial asset. And you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, we shall be moving right into the next financial asset on our watch list. So the next asset on our watch list for today is the cable market, that is the GBPUSD, and in fact we've been doing pretty well in the last 24 hours as we finally saw the US dollar gain some positive traction against the GBPUSD, and of course ahead of the Jackson Symposium, Jackson Hole Symposium, and of course the Fed's chairman speech coming up much more later in the day. Now, I would like to run through how the week started for us here before we go into the details. So, at the beginning of the week, we had a range. Remember, we saw price action confined between the 1.27250 and the 1.275, giving us a flat channel to work with, as you will see. And of course, you know how we use this kind of channel. When they come up on our chart, we wait patiently for either a breakout or breakdown of that range. And in fact, for the first half of the week, it was more of buying, as we saw price broke out of that range, had a resistant level to incite our first buy position for the week. And in fact, we joined that move, added one more positions at the breakout of the 1.278, and we had about a 50 pips move for the first position, while the second position moved about 25 pips before the bearish momentum began, taking us out of that position with some modest size of profit. And I told us all on Tuesday that for counter trend traders, you can capitalize on this breakdown of the 1.278 into this area to join join that counter trend opportunity. But that later turned out to be the beginning of a downfall of the pound sterling. Now, during the live session on Tuesday, we talked about the breakdown of the 1.27250 to trigger our first sell position for the week. And in fact, I told us all on that Wednesday that if for those who had missed out on the breakdown of the 1.27250, that we should remain a little bit more patient, waiting for new structures to emerge, which of course one of them will be price coming back to retest the structure that was broken to incite a downtrend scenario. And for those who are taking advantage of this opportunity, well done to you. And remember that we also acknowledge multiple levels that we said if price breaks down of these structures, we shall be adding more sell positions. We have levels such as the 1.271, as you'll see here. We had the 1.267, and of course we had the 1.26200 level yesterday, which was also broken to maximize the potential of this bearish move. So at this point in time, we have over 300 pips running in profit from 4 good positions at this point. Now, for those who still have a sell position running right now, it is quite necessary that you move all your stop losses to secure this current sell position, as anything could happen from this area. And considering the fact that today is the last trading day of the week, we are likely going to be seeing some reversal setup that might happen. It's just an opinion based on how market participants react on the last trading day of the week. So we want to keep that idea open. So with the current situation here, I'm of the opinion that anywhere around the 1.26200 area seems most appropriate to secure this current sell position at this point in time. Now, in anticipation of the New York session today, how do we intend to manage this position? How do we intend to trade the GBPUSD? What is it that we want to see on this chart that will make us want to buy or sell this asset? Well, the first thing I observed this morning while trying to decipher what our next line of action will be is this level at the 1.25600 area. This is the lowest point price action has been for this week, and in fact, when price got into that level during the early hours of today, we begin to see some buy pressure around that area. Now, a lot of people might be thinking it's time to start buying. Well, for me, I have a different opinion about this current structure, and one of the things I'm noticing here is the 1.262 level, which was broken yesterday. Now, remember the 1.262, we talked about this yesterday. We talked about how this level had been a strong buying niche since the beginning of this month. Look at what happened here at the beginning of the month. Look at this 1.262. Very strong buying niche. We saw how sellers have been struggling around that area since the beginning of the month. Look at what happened here, buy pressure. Look at what happened here last week's trading session. We saw buy pressure. And look at what happened here during the midweek. We saw buy pressure here until yesterday's trading session when price action finally broke through that level to the downside. So we finally had a breakdown of that structure, which is a significant signal that we might likely be seeing a downtrend scenario. Now, with this situation here, from a technical standpoint, when price action breaks down a key significant structure such as the 1.2620 level, we expect at some point in time price is likely going to come back, retest that structure, and the appearance of selling pressure around or below that level is going to incite a downtrend continuation. So the buy pressure we have been witnessing here since the beginning of today may likely turn out to be a retracement of that impulsive bearish move we witnessed here yesterday. So you can see how it is very necessary that we exercise some patience and see how the market will be reacting to the 1.262 to decide what our next line of action will be. Now, coupled with this structure we have here is the descending trend line we spotted here at the beginning of the week. Now, remember, we connected the series of lower highs. It has been a strong bearish momentum, of course, since the beginning of the week. So we have this descending trend line figured out. Now you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we have no business buying that asset. We of course want to be looking out for patterns and structures that will support the idea of selling at this point. Now, interestingly, that descending trend line also shares a beautiful confluence with that 1.262 level, giving us a crucial juncture to be patient enough to see how the market will be reacting to that structure. So there are two ways to which we can capitalize on potential trading opportunities here. The first one is we look out for price coming back into the 1.262, which of course lines up exactly with that descending trend line, where the appearance of selling pressure will give us a scenario where price is about to respect the descending trend line one more time to push price to the downside. So that is one way through which we are going to be capitalizing on a bearish opportunity. However, if price action at some point in time today breaks out of both the 1.262 and the descending trend line we identified earlier, then at this point we want to start considering buying the GBPUSD. As a breakout of that descending trend line will be a good sign that the trend line may no longer have the capacity to continue to negate that bullish attempt, and in that case scenario we will have no other choice than to get ready to buy. And of course, if we are going to be buying, we will need some confirmations to happen before we jump into any buy position. And the reason why that is simply because remember that we are on a very strong bearish momentum where a breakout could turn out to be a false breakout. So because of this, we want to be very, very careful. So as soon as we notice the breakout of that structure, we scale down into a lower time frame where we shall be looking out for confirmation that truly this breakout is valid, and this would reflect on the chart as retest of either the trend line or the 1.262 to incite an uptrend continuation. And of course, we have multiple levels which we shall be using to maximize the potential of that bullish move. So we have the 1.267, the 1.271, the 1.2725, and of course the 1.275 if price action continues to break out of these levels. So that is how we are going to be buying the GBPUSD. So you will agree with me that this confluence here is a very crucial moment where, depending on how price action reacts to that level, will determine if we are going to be joining a downtrend continuation or getting ready for a reversal pattern to push price to the upside. Now, there's one more thing I would like to talk about here before I close on the GBPUSD, and that is the 1.256 level. Now, if price action does not climb to as far as this zone at the 1.262, but instead it continues to find lower lows and lower highs, then a breakdown of the 1.256 will be welcoming our next sell position. Now, for those who still have a sell position running, this will be a beautiful opportunity to add more sell position to our existing trade. And for those who will be joining for the first time, this will be an opportunity to be part of the downtrend continuation. So this is how we are going to be managing our trade on the GBPUSD today. And as you can see from what I have said so far, we are at a critical moment where our central focus for today is simply going to be between the 1.262 and the 1.256 level, where we shall be looking out for how the market will be reacting to the zone to determine where it will be heading for today. So you do want to be marking out these levels and trend lines on your screen right now, as you will be needing them as a reference point to guide your independent trading decision for today. If you have any questions whatsoever as regards to my explanations, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever as we get prepared for the New York session, and you can as well use that time to quickly mark out these levels on your chart. And you can as well screenshot my screen if you want to. I think that will be much more faster. All right, so I see your comments. Belina, good morning. 828. Skyborn, how are you doing? Senku, thank you. All right, so in the absence of no questions, I want to assume that we are all on the same page. So we shall be moving right into the next financial asset on our watch list, which of course is going to be the last instrument we are going to be taking for today. So the next asset on our watch list for today is the XAUUSD, popularly known as the gold spot. And in fact, this is my favorite asset among the assets we have been monitoring so far this week. Now on the XAUUSD, we have a tremendously profitable position here where we were able to scoop in over 600 to 700 pips on this asset, as we have been buying the gold commodity throughout the course of the week. Now, before we go into the details here, I would like us to run through how the week started for us and what incited the idea that we should be buying this asset. Now, at the beginning of the week, we initially acknowledged that price action has been bearish since the beginning of this month. And as a result of this bearish momentum, we emphasize the strength of the sellers using descending trend lines after connecting the series of lower highs. However, something interesting began to come up on this chart that led into the idea of us negating a potential trend continuation to the downside, and that was around the 1,885 level. Now, as early as last week's trading session, we noticed how sellers continue to struggle when price got into the 1,885 level. We saw what happened here on Thursday. We saw buy pressure resume around this area. Then we saw what happened here during the early days of this week. We saw buy pressure, we saw higher lows, and it was at this point we knew that it is likely that price action will be breaking out of those of the descending trend lines we identified earlier. Now, in addition to this observation here was a range which we spotted where price was confined within the 1,891 and the 1,885 to give us a flat channel to work with. And you know how we use our flat channels in this community. We want to exercise patience when price action is within the channel, waiting for a signal in the form of a breakout or breakdown of that range to give us an opportunity to either buy or sell. And in fact, it was more of a bullish signal we saw here. We saw price break out of the trend of the key level of that resistance line, at the 1,891. And during our live session on Monday, this was where we were, just around the 1,888 level. And I told us all that we are going to be positioning ourselves just right above the 1,891 to capitalize on the uptrend continuation. And this was exactly what happened. We saw the first attempt by the buyers. This moved about 70 pips before sellers came in. We had a modest size of profit on that one. Price action came back, then retested the structure to give us another opportunity to join the uptrend continuation. And since that moment, we have been buying the XAUUSD. As you can see, we rode the move all the way to the upside, adding more positions at the breakout of very important levels such as the 1,896, as you will see here. We also added more position at the breakout of the 1,900, the 1,904, as we kept on capitalizing on this uptrend continuation. For those who have been part of this profitable journey, well done to you for being on standby to have capitalized on that move. And I did told us yesterday that we should secure our positions. Of course, if you had done that, you must have been taken out of that buy position we took advantage of a couple of days ago. Now, during our live session yesterday, we acknowledged an interesting situation in the market, as we saw here that when price got into the 1,923 level, which happens to be the highest point price action has been for this week, we begin to see some selling pressure resume around that area. And one of the things we said here yesterday, considering the strong impulsive bullish move, that it is likely we might be seeing some profit-taking activity, which would reflect on the chart as a retracement of that impulsive move. And as a result of that scenario, we expected that if price breaks down the 1,918 level, we shall be looking out for selling opportunity. Though price action did break down that level actually, and in fact it moved about 50 to 60 pips in our favor, and if you had moved your stop loss, you would have been taken out in a worst case scenario break even. That was the first attempt by the sellers. Then we saw the second attempt happen again after another sharp rejection of the 1,923 level, giving us signs that buyers are finding it difficult to break out of that level. We saw another one come in, as you will see, moved about 50 pips before the buy pressure here resumes. And I do hope you moved your stop loss. If you had done that, you must have been taken out with a worst case scenario break even. Now, with this information we have gathered here on this chart, how do we intend to capitalize on a potential trading opportunity today? Well, the first thing I did here this morning, I already have a buy position running right now, and I will be explaining to you what led into the idea of buying the XAUUSD at this juncture. Now, despite the potentials of sellers in this market after considering the multiple rejection of the 1923 level, it is quite clear that sellers are still finding it difficult to break through and drop to the downside. As you will see, as soon as price got into the zone between the $1,914.50 level and the $1,912, we saw how buyers jumped in to negate the attempt of the sellers. And because of this situation here, I'm beginning to consider that we might be in for an uptrend continuation. Look at the lowest point here, the 1912, and in fact, in the last 7, 8, 9, 10 hours now, price is yet to break the previous low, hereby giving us a higher low. And of course, in this community, when we begin to see higher lows evolve on the chart, it is a sign that buyers are gradually gaining momentum behind the scenes. And as a result of this scenario here, I positioned myself just right above the $1,916.30 level to capitalize on the uptrend continuation. And what makes this level significant is the fact that it also shares a confluence with this descending trend line. So the breakout of that descending trend line for me is a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt. So as a result of this, I personally have a buy position running at this point, which is currently running with about how many pips now? About 14-15 pips, which is not that significant, but this still does not confirm that the bullish momentum will become valid for today. But for those who are taking advantage of that opportunity, well done to you. So let's see how the market will play out around here. Now, going into the New York session today, and for those who had missed out on this opportunity, well, let's see how the market will play out. So we already have a breakout of the trend line happen. So there are chances that we could see a situation where price will come back, retest the trend line that was broken, maybe even go to as far as the $1,914.50 level in anticipation of an uptrend continuation. So we are holding on to a bullish bias here as long as price still remains above the $1,914.50 level. So we want to ensure that our stop losses stays around that area, just right below that area, so that we can capture all the possible volatile movement that could happen or consolidation phase that could happen around that area before the bullish momentum begins. So let's continue to hold on to a bullish bias, and if price action goes on to break out of the 1,918 level, we had more position to our existing trade, and if it goes on to break out of the 1,923, we had more position to our existing trade. So at this point in time, it's looking bullish. Let's hold on to a bullish bias and let's keep the momentum going. However, you know how we do it in this community. In as much as we're looking out for bullish opportunity, we also want to keep tabs with the opposite direction too as well. So if we are going to consider selling today, what is it that we are going to be seeing that will make us change our bias from bullish to bearish? Well, like I said earlier, we already have a zone where we have seen how sellers have struggled, meaning that buyers are present around this area. So as long as price still remains within the zone, we shall continue to hold on to a bullish bias. But the only condition or criteria that will make us sell at this juncture is for me to see price action slice through the zone. And it's only when price slides through the zone and a retest of structure will I start considering selling the XAUUSD. But I doubt if this will happen today. But if it does happen, let's get ready to sell anywhere below that zone that we identified here. But at this point, it's still looking bullish. So let's hold on to a bullish bias. The only thing that will make us sell is for price to drop through that zone. So these are my views here on the XAUUSD today. It's a simple setup. So you would want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. If you have any questions whatsoever, feel free to let me know in the comment section. I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move right into ending the session for today. All right. So in the absence of no questions, I want to assume that we are all on the same page. And in fact, it has been a splendid moment with you guys today. I'm grateful to be here with you guys. And we were able to attend to 4 financial assets today. In fact, these are the assets we have been monitoring since the beginning of the week. And I'm very excited that we have been doing pretty well on these assets so far this week, and these are the USOILSPOT, the USTech100, popularly known as the Nasdaq. We also treated the GBPUSD and of course the XAUUSD, popularly known as the gold spot. And on all of these assets, we were able to identify simple setups that we can use to guide our trading activities for today. In fact, very simple setup using only trend lines, key levels, and chart patterns to identify potential trading opportunities. So I encourage you to remain patient, and let's wait for our structures to mature before we jump into any positions on the assets that we have monitored so far. And I do hope that you have marked out these levels on your chart, and I'm very confident that we will be able to capitalize on these opportunities as we were able to simulate all the potential trading opportunities that is likely going to be happening for today. And please don't forget that we have some key events coming up today. We have the Jackson Hole Symposium, and of course the first chairman is going to be having a speech, and this event is likely going to be causing some volatility in the market. So let's ensure that we have our stop losses in place as I have projected, and guide our position against any sudden pullback against us that might take us out in a loss. And it's on this note I wish you all the best of luck today. It has been a wonderful moment, and I look forward to seeing you all again same time Monday morning, 10 a.m. UTC, 11 a.m. West African time, as we come here again to have a fresh new look at the financial market ahead of the new week and of course the new month. Thank you everyone for being around, and for those who are joining us for the first time, I do hope you are able to gain 1 or 2 things, but I encourage you to stay tuned with us, be part of the subsequent sessions so that you can eventually be able to use the information you have gathered here to make your own independent trading decision. So I wish you all the best of luck once again, and do have a wonderful evening and also a splendid weekend. Bye-bye.